What is up, boys and girls? Can you believe it? It was funny. Dude, markets in turmoil. You know what's we haven't actually seen that CNBC headline markets in turmoil thing, the special edition. That's probably when we need to buy, but I don't know that it's yet. I don't know that it's yet. I got my boy here. Let me see if I can get him up. Emp is in the house. There he is. Look at this beautiful face. What's up,
What's
man?
up?
Look at this amazing pyramid he's got behind him too. So what do you think, dude? Do you believe this? Can you believe anything? What's happening?
It's something comes out, it gets walked back, the walk back gets walked back, and then it gets reconfirmed.
Dude, I mean,
What else do you do? That was insane this morning.
yeah,
90-day pause, fake news. Like, what are you
dude,
doing?
that's wild, right? I didn't see the fake news coming out like that quickly. But who knows? We are like, if you're bullish, you're waiting for something like that. That's 100% for sure. Really, what you have to have. I mean, markets opened up down another 5% almost, which is I don't like they were 15% in 3 trading sessions. I'm looking at them like, oh, it could bounce. And some of the guys in the server are like, I'm looking for like 2 to 3% bounce in the next couple days. And like, holy hell, we went from -5 to up 2. So that's a 7% rally in minutes. We were already bouncing though. I'll say this. We were already bouncing before that fake news came out. Limit up, Victor. It's possible, right? We had limit ups in COVID, but I don't think we're ready, right? I think we can bounce. I don't know that here now is the time to sell either. So it's a really tough one. It must be in Starlink, 6 Starlink, yeah. But we'll see. Hopefully, I can give you guys a little bit of guidance right now. That's the idea. That's the help. That's the hope. I was doing the market prep this morning, and I'm like,
How'd you prep for the like doomsday preparation? Do you have ramen noodles prepped?
I mean, let me see if I can even find the slides here because I was like, do I just throw the slides out? But I think that's the right one. There it is. This is my thumbnail. Can you believe anything that you see? I really don't know. And even if we do go up, can you believe it? Here's what I believe is true is that we are actually in a bear market. So there was too much. There was already too much damage done before the last bump, like bounce, like a month ago, to think it was going to be anything more than a dead cat bounce. And I did say, like, look, don't buy this if you don't know how to use the sell button. That's true. But again, trying to do the recap of the headlines, I'm like, that's it. Like that's literally all I could do. There's really nothing. I just applied to McDonald's from Patrick. There you go. Dude, it's tough,
This
right?
is the best analysis I've ever seen.
It was good. We were here,
WTF.
right? The last time we spoke about a week ago, and we did get a little bit of a rally. And my concern is and was that if we did get a pop and it didn't, and this is through a couple months, if it doesn't make a new high, well, we could be in some serious trouble because honestly, next year is not supposed to be a good one, right? You guys. Yeah, dude, that WTF ticker, that was crazy. So you see some squeezy stuff like Newsmax, WTF. Those usually signal the beginning and the end. I can't really say that this is the end, per se. Here, what I'll just do is I'm gonna grab the calendar. I think this is so this is last week. Hopefully you guys can see it. Let me see if I can make it a little bit bigger. Let's see. Is it better? There you go. All right, so we got Chicago PMIs. This is the data, right? And I am going to go through the data because it does matter to an extent. obviously the most important stuff happening right now is the tariff shenanigans. We'll get to that here in a second. Chicago PMI. So real raw data still matters, right? Everything that's happening with the tariffs is still, even to this point, more like speculation because the tariffs haven't gone through. They don't go through till I believe it's tomorrow, the 9th, right? Wednesday.
Yeah, it's supposed to be the
So April 9th
day.
is the actual deadline. Between now and the 9th, we can see all kinds of crazy shenanigans. So let's just work with what we got. Sorry, guys. I'm trying to be as helpful as possible. PMIs for Chicago did come in slightly lower than consensus. This is anything under 50. This is contracting, right? ISM manufacturing PMI on Tuesday came in 49. Consensus around flat, but no. So we did contract a little bit. Jolts, this is job openings, not what was taken. The job openings came out and it was slightly lower, so less hiring going on. This is the market does have some data to get a little bit worried about. Employment 44.7. I mean, oh, what the hell? Is something happening right now in the FTSE? Because this is going crazy. Oops, what just happened? It just changed my date. Damn it. Previous weeks. And then we got services PMI 50.8 against a 53 consensus. Did I miss this? Oh, it was when Tuesday. Tuesday, we got the reciprocal tariff plan, and that's what just absolutely shook the market. I'm going to go back into the charts in a little bit and show you guys, if you know me at all, our NFP levels are insane, right? Absolutely insane. Patrick's saying Europe has second retaliation package in place already, and prepared for a third. Well, there you have it. This is just crazy time. So reciprocal tariff plan comes out on Wednesday, shocks the world. Nobody saw that kind of stuff coming. Services PMI again 50.8 against the 53 consensus. That's coming down. And then Friday, which is and was the most important day of the week or month. I'm going to nothing's changing from the way that I trade. It's still going to be Friday. I don't care if you think that this is the least important NFP data that we'll get because of tariffs. It's what's true. And I know it to be factual. And to this moment, even right here, right now, this is playing out perfectly. So I'll show you guys how to trade this from here. Non-farm payrolls did come in slightly higher than consensus. Well, definitely higher than consensus, but we got a lot of revisions. What we want to watch here is mostly unemployment rate up to 4.2 from a 4.1 consensus. Average. So unemployment slightly ticking up. Hourly earnings not moving at all. Annual, like year over year, hourly average earnings slightly ticking down. Participation rate kind of flat. And then we did get Powell's speech, which spurred a little bit of a bear market bounce, but it was almost a laughable. Did you watch that speech? It was almost a laughable event.
They were trying to make it laughable. They're, cutting jokes about his tie being, purple being his favorite
but
color and
like
stuff like that.
because it's so crazy out there that like, what are you gonna say, right? And I think that some people are hoping. I hate to use the word hope. If you're using the word hope, some people are hoping for a emergency rate cut. It's possible, but look, it's not probable. I don't see that happening right now. And you definitively cannot plan for that. So anyways, you know what, Emp, if you have your thing ready, that's where we are. Maybe we get a bounce. It's not looking great. I think this whole situation, look, we needed it. If this bounce doesn't play out, it's not good. I don't think that we're gonna get it, but we have some catalysts, and let's see what they are. Emp, if you're ready to roll, there you go.
I'm ready to roll. Lux Algo. Shout out to the Lux Algo team at Lux Algo, of course, right here on X. They always the graphic gets me every time. They have not missed with this graphic in quite a while. We've got Kramer. This is like the old school like Pokemon look down here at the
Yeah.
bottom with the chat. Like that's pretty funny. Not gonna lie, traders, it's looking like another insane week in the markets. Here's what is on deck. So this is what we do know. There's a lot of things we don't know, right? Paper, there's a lot of things we don't know. Here's what we do know to be true. These things are supposed to happen this week. We did have Fed Kugler speaking a lot this morning. Earnings really throughout this week, there's not much, but on Friday, we get some big banks. We get Mr. Jamie Dimon to come speak to us. So there is some interesting.
He's been releasing some comments already.
Yes, very like as he's in a blackout period, still trying to release comments. It's kind of an interesting thing. That's the other caveat here that I know hasn't been mentioned. Almost all of your big CEOs are going into blackout period right now as this is all happening. So you think about like all your Mag 7s and stuff that are coming up in about a week and a half, 2 weeks.
Yeah.
They're all going to be stuck in blackout and not be able to say much before then. So this earnings season will be very, very, very interesting. But yeah, Monday they had the blacking. Definitively, I don't think we have a Black Monday definitively at this point. Now,
I don't think that we could ever really have another Black Monday though with circuit breakers per se.
Very true, because the last time that happened, that's where the circuit breakers were actually put into place was 1987 after Black Monday. That's when they built those in. So, but yeah, going through the rest of the week here, Tuesday we do have a little bit of data coming out in the morning. Nothing really that big. Fed's daily is going to speak. We do have several Fed speakers coming out. Wednesday we get a little bit more spicy. So the thing is, so much of the stuff is going to be overshadowed by the tariffs. But Wednesday is the day that we do go into effect with the tariffs. So the 9th. There was also a comment from Trump a little bit earlier that he could possibly raise China's tariffs another 50% if they don't back down by tomorrow. So that
literally just came out though.
Yeah, like 20-30 minutes ago, I think, somewhere in there. He also just said, this is right now from Axios, Trump issues a veto threat on the tariff bill. So there's another caveat.
What is that?
So like if the Senate puts out a bill and tries to make a bill around tariffs and stuff, he's just going to veto it down, which makes even more political muddiness, I guess we'll use that term. That's a friendly term, right? But Wednesday, yeah. So those tariffs do go into effect on Wednesday. We do get some wholesale inventory data then. Fed Barkin, another Fed speaker then. FOMC meeting minutes. I wonder what that's going to look like coming out on Wednesday afternoon.
If you thought we were out of the woods from data, you were wrong, by the way.
No, and it doesn't stop there either. So here's Wednesday. We do have Delta Airlines as well, but FOMC meeting minutes at 2. You see the little spicy chili pepper right there. Thursday, Walmart annual shareholder meeting. So that one may not be on most of your radars, but that is not on a radar.
That was not a radar item.
Yeah, there you go. So Walmart annual shareholder meeting, they hold that at in Fayetteville at Bud Walton Arena. Been to it actually once before. It is a pretty cool little deal that they do, but that is on Thursday. Jobless claims CPI Thursday morning. I pause as I say CPI on Thursday morning. You thought data was over after what we had the last couple of weeks. NFP on Friday since the last time we spoke. And here we are, CPI inflation data, 8:30. What does that reflect? Does it reflect anything? Does anyone take any of that into account? That's going to be so many question marks around that. Look how many Fed speakers, Fed Logan, Fed Goolsbee, Fed Harker, Fed Bowman goes in front of the Senate on this day. Ton of Fed speakers and a 30-year auction all on Thursday. Look at that, Fed Cook as well that afternoon. That's Thursday. Then Friday. And notice the title here on Friday.
CarMax earnings? Dude, I haven't seen CarMax ticker in so long. Holy crap. That might be an interesting one, actually.
Yeah, hey, with the auto.
How are the consumers doing? Are they buying used cars?
Well, and what are the pricing of those used cars going to look like if making new ones or any production delays, anything happens? I mean, maybe there's your beneficiary. honestly, if you think about it, these used car dealers.
I
So
mean, have you
that'll
seen
be
Dollar
interesting.
Tree lately? Because that's like, holy moly.
Yeah, yeah, Dollar Tree, Dollar General, both.
Yep.
All the dollar stores, they're front running the recessionary fears here. Friday, though, Friday, the title right here, very, very interesting. Earnings season begins. So the official, I guess, kickoff of the earnings season. Now, a lot of people like me, Paper, I don't know what you think, but for me, it's usually Netflix and Taiwan Semi that day usually
Yeah.
kicks off earnings season for me
Well,
personally.
for
But
tech, yeah.
for tech because I am more of a tech focused investor and trader. However, I do definitely pay attention to the big banks. Now, I don't dig into the earnings as much as I listen to what the CEOs are saying. I think it's very important. Um, PPI inflation data. Let's throw that out there. So
It's a big
PPI is
one,
spicy.
actually. Market has
Michigan consumer
definitively
sentiment.
been reacting on that.
Yes. So Michigan consumer sentiment. This is the first edition of that that's coming out. That is usually a pretty spicy, and you see the chili peppers here again. That's a pretty spicy one.
The
Two
chili.
Fed speakers, and then all your earnings. These are all before the open earnings. So J.P. Morgan, there's Jamie Dimon, Wells Fargo, Morgan Stanley, BlackRock. There's some big earnings on Friday morning before we open. Basically, while all this data is coming out, while we get PPI coming out, we also will be getting headlines from Jamie Dimon that'll be everywhere. And when Jamie Dimon speaks, Paper, I don't know your thoughts on this, but there's probably about 5 people, 6 people that when they speak, the market really actually listens and
Yeah.
reacts. Obviously, Trump is one of those. Fed Chair Powell. I would put Jamie Dimon in that top 5 of people that speak and the market listens and reacts. So I mean, Jensen Wong probably up there as well at this point. But yeah, so that's your catalyst watch for the week. Shout out to Lux Algo. Definitely check them out. You see it right there on the bottom of your screen at Lux Algo. They put this out every Sunday. Definitely have that on your radar because there are little things like this right here. This is the reason why me and Paper love doing this because they find all these little things. So there's times where, there's an AWS event for Amazon. There's,
Yeah.
IBM's got some kind of event, whatever it is, that maybe isn't on your radar that you need to know about that could affect your trading. Like this one right here, Walmart annual shareholder meeting. So definitely check out Lux Algo. Plus, they have great memes, great graphics all the time. So
Plus, they
good
have great
news, good
news.
memes. Come for the memes, stay for the news, and stay for the alpha that you get from
And they
the
throw some
Catalyst Watch.
tried out the ideas out there for sure.
For sure. But yeah, Paper, I'll turn the screen back over to you and let you dive into it a little bit.
All right, man. Well, I appreciate you, bud. And appreciate Lux for always helping out. So this is just a quick recap, right? So today, really nothing, Burger. Tomorrow, not a whole lot. I don't think the Jolt is gonna be market moving at all. I just don't. It's all gonna come down to Wednesday, right? Wednesday is the 9th, which is the day that the tariffs are supposed to go into effect. Between now and then, it's gonna be sloppy, it's gonna be choppy. That's just what it is. Wednesday, we get the FOMC minutes, and that's more like an insight into what is the Fed thinking. And how did Miss Rachel show up on here? I don't know what happened there. But anyways, that's more like, are the analysts are going to be thinking about or looking for, did the Fed even consider some kind of reaction to what might happen, right? And then Thursday, this is the market's number one favorite data point for whatever reason. It is CPI. That is and will and can be a major market moving event. Again, this is flip-floppy. I think a lot of people are really chomping at the bit to go long if they haven't already. I need a real signal, and I'll tell you what, I don't have it yet. We will go into the charts a little bit, and if I did, honestly, the upside target is exactly where we stopped this morning on the fake news headline. So that's pretty concerning, to be completely honest, because to see things going that far that fast, it's wild, right? Again, for earnings, as I've said, we get Levi's, we get Delta, we get CarMax. And then the banks kick it off on Friday. So there's definitely a lot to happen. But there's always one true kind of like source that we can rely on to give us really what's happening. And if you don't know who that is, that's Miss Cleo. All right, so here we are. So this is a forecast for the week, you guys. Everybody's favorite part of the day of Mondays. I'm gonna see if I can make this a little bit bigger for you. I did a different way to screenshot it. So we get a theme card on the top. The T in TA is tarot. Yes, Oscar, you are accurate on this one, brother. But theme card is the Hierophant. Hierophant? I don't know how to say it. How do you say that? Hierophant? Whatever. But that's the theme for the week. And then every day we get a new card. It's not so bad. Ooh, I see a card. I see 2 cards that are standing out. Do you see these cards up? So I just have a feeling that Miss Cleo's looking for some bounces this week. So card number 1 is the King of Cups.
I don't know what I feel about it.
I still don't know how I feel about it. The question, I think, is depending on your time horizon. The question you need to be thinking to yourselves as the market goes on, and I'm sorry, I'm actually getting serious here for a second, is if we do bounce, dude, what is this? Oh, Catherine's in. All right, Hierophant. Hierophant. They're helping. I don't know. If we do get a bounce, and this is on a serious note for just a minute, the question that you probably want to be asking yourself is if you need the money within the next few years, do you use any bounce to raise cash? And I think if you're longer term, or even if you're medium term within like under 3 years, less than 3 years, I think maybe. So I'm just going to leave it at that. But here we go. King of Cups for today. I don't know what that one is, but it looks okay. I know this card Tuesday is the Sun. What I will say, and then it's followed by the Fool. I remember the Sun is like you've gone too close to the Sun and you need to pull it back a little bit, and maybe you end up looking foolish. So this looks like a little bit of a pullback. This is the 10 of Cups. This actually looks like a pretty good card. I don't remember what it is, but it's a high number. And then the Empress, which might be kind of choppy. So I think the Wednesday, right? Wednesday is the tariff day. Anyways, let's read what she has to say. So the theme card, Hierophant, is the theme card. The key words here are tradition and conformity. This usually reads like structure and rationality. Okay, so I don't know. There wasn't a whole lot of structure or rationality today, so she might not be starting off on the best foot. We'll just leave it at that. However, it doesn't mean that the price will be boring from day to day. Okay. Instead, dude. Okay, well, this is the theme card. Instead, I think we can expect some wild volatility. Okay, that bounces back and forth in order to close the week closer to last week than we'd expect. Interesting. Monday, King of Cups. This card usually appears when things are bad and need help keeping our wits about us. So, okay, so today she's off to a decent start. There will likely be feelings of panic and hopelessness. You definitely felt that if you're looking either at Sunday night futures or Monday night pre-market. That's true. The King of Cups reminds us that the pain is temporary and that things will get better. How much better, we don't know. Don't freak out, she says. Stay calm. I think that's exactly what Trump tweeted. Don't panic, right?
No, a panican. He invented a new word and self-defined it in that post.
God.
He said a panican.
I expect a battle with weakness. That was today. Big pop and weakness. Fake news can do that, right? with possible reprieve in the afternoon. Well, that's here. He does usually close red, but almost never more than 1%. By the way, Miss Cleo sends this over to me on Sunday nights. And she wrote this before any of this happened. So, so good on her so far, actually. Given that the indices are battling 4 to 5% down days at the moment, this seems like a stretch. However, it does provide hope that some dips will be bought and may see an attempt to provide stability. All right. Tuesday, the sun. The sun arrives during days of darkness. The sun arrives during days of darkness to chase away the shadows and restore hope. There you go. I would not expect a huge rally. Okay. It's possible, but just not likely. But would expect to see dips supported and an attempt to close positive. She's thinking we start to close positive Tuesday. I will say that the price action and energy has been magnified during the past few weeks, really. So trend a month ago is not the same as trend today. Well, bullish a month ago is not the same as bullish today. That's true. It's almost as if a 1% day would be considered choppy. That's also true. Interesting. Feel free to ask another guy. If you guys want to ask Miss Cleo questions, I can submit them. Wednesday is the Fool. We begin a new hopeful journey. Okay. Yeah, so Wednesday, that's the tariff days. The new journey, unaware of the dangers that lurk around the corner.
Okay.
God, this card usually brings a rally, sometimes euphoric, which sets up a decent short a day or two after. There you go. This card is almost always trends. I would expect a trend day on Wednesday. So you can probably chase positive energy on a gap down. Chase positive energy on a gap down. I'd wait for attempt to fill it before getting short. Chase positive energy on a gap down.
So we gap down, we go fill the gap, and then short the crap out of it.
Yeah, that doesn't scream trend to me. So maybe Miss Cleo might be confused as to what trend means. But anyways, Thursday's 10 of Cups. 10 cards usually bring the culmination of a move. In the instance of Cups, it suggests that the emotional state we're feeling will not get any better. Oh God. The emotional state we're feeling will not get any better or worse than it feels on Thursday. Meaning enjoy it while it lasts, because tomorrow things might change. I'm pretty sure, but I think Miss Cleo says liquidate on Thursday. Oddly enough,
Before all the CEOs from the banks come out and tell us how bad it really is.
oddly enough, on my bingo card, I also had liquidate on Thursday as a possibility.
Oh God.
Not a joke. Interesting. You know, we shall see. What's a Friday? Oh, look for a continuation and an attempt to form a top or bottom. If Wednesday was green, then this day probably sets up a decent pivot. If it was red, bulls may finally get a chance to play for real. All right, so I think so. She doesn't know what's going to happen between now and Thursday. Nobody can really know. I can tell you that as long as we're below Friday's low, we're not going up. We're going down. So maybe if Thursday's the low, is what she's saying, that's the day to get long. We'll see. Friday, she gave us the Empress. The Empress tends to ground us, which leaves us open to weakness early in the session. However, she's mostly a consolidation card, which means that topping or bottoming process isn't ready to spring a trend day quite yet. This means don't buy Friday calls or puts. I mean, do you do that? Don't buy Friday calls or puts expecting to cash in on a big day. Instead, look to Wednesday as the peak of that energy and Thursday, Friday, the unwinding of it. I like that. Miss Cleo's recap. Sunday is bloody already. Remember, she gives this to me. She gives this to me on Sunday night. Sunday is bloody already. So this will be an interesting week. Anything goes as it relates to the news. Yeah, anything goes. The card says we can expect early weakness. The cards say we can expect early weakness. Well, we definitely got that in the pre-market. An attempt to relief rally. All right. And perhaps the building of another top. which would be Thursday. All right.
I think we would welcome a top at this point. I mean, actually, Paper, before we move on from Miss Cleo here, can we
Yeah.
just talk about Friday's card real fast? We
Friday's
talked about
card.
this last week, last Friday, no, last Friday's card.
Oh, last Friday. Yeah.
Last
Let me
Friday's
see if I
card
can.
was the naked person drinking water from the the spring or whatever.
Yeah, we can do that. This is actually where it is. It's a tarot trader guy. So first he gives us crypto. Is it? Damn it. Oh, so this was Tuesday. What week is
Okay,
this?
well, that was the card for Friday on the markets last week.
Damn it. I need to go back to the server. That's too hard to find. Back to the server.
Just remember, we talked
Uh,
about that Friday card about just being naked and alone in the wilderness and trying to find a
Yeah.
drink of water. And boy, that was it. That was it, right on target.
Yeah, so
With
it was this.
Friday's card. It was like a bunch of stars, and then somebody was just like without clothes. There it is.
There it is, right?
Yes.
So it was this Wednesday, which
That
happened.
was the truest card we've seen from Miss Cleo
I
in a
think
year.
it was literally this boom, 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 done, fail, fail. This might have even been a retest or something. And I think this was gold's all-time high day, by the way. Interestingly enough. Yeah. So what did she say Friday? Friday it was brings continuation when following a major arcana card, especially the 6. Star brings hope. That's good for next week. However, it could stick us with a bit of. Oh, this is the one where I was like, dude, she has no idea.
Yeah. The analysis didn't really match up. Well, the continuation part was right. We definitely got
The first
continuation.
sentence was right,
But the
then she
card
was like,
the
it
card
could
itself
be.
was what got me.
It's usually continuation. It could be consolidation. However, if we gap, then it could be good. So I'm like, Miss Cleo, come on. But she nailed the other days though. You got to give her that. So she absolutely decimated midweek. Let's just see. This is where it is. It was mean reversion, 8 of Swords, feeling bound and helpless. This was the bad day, right? Unable to free ourselves from the trap of victimhood.
Greedy
Yeah.
during a green day. There at the end of the day,
Yep.
it went super green, right? Like
Yep.
right in after
This is the
hours.
day. And then kaboom. Usually trends and closes red. It trended up and it closed red. Don't get long into Tuesday's close. And all week last week, we were like, look, don't do anything until this week, and then we got to hash it out. And then Thursday, start of unwinding. Yeah. Represents a bottom. Now it's unlikely. Yeah. Longing and a longing for easier days. It might be best to take it easy here. Yeah, well, she did good there. That's what I can say. So that's good. Here's what I'm going to do. I am going to pull up I'm going to get into the stocks. You guys want to look at some stocks, some stock charts? One thing I'll do first is that I'm going to pull up our internals before we get here. So on the right, I'm going to put SPY, 5-day, 15-minute, or what is this? A 5-day, 5-minute chart, right? Across the board. 5-day, 5-minute chart across the board. Tick. So this is net flows, net volume. So volume up, minus volume down, net volume. This is advanced decline line. So, I mean, Monday we're coming in and it looks okay. We're still negative. So we are in a bear market. That is what it is. Tuesday, Wednesday, we get a nice little bounce, but it's very muted. Like Tuesday opening here. And as I'm looking at this, you can kind of match up what are the net volume flows doing? So yes, this is green, but for the most part during the day, while SPY's going up, the net volume isn't really positive until like the very close of the day. And even then, it's very muted positive. And this is advanced decliners. It barely flipped just over the zero line. So that was like the first time we saw some green on the net volume from that perspective. The next day, it was actually even more muted. This day here, we opened and we have some net inflows. This is the day that we got like after hours. We were getting our tariff announcement, and then boom, the selling ensues. We have 1, 2, 3 days now in a row of just nothing but selling volume. The only thing I can say here from an internals perspective, and then on the tick, by the way, again, most of the days here below the zero line, pretty much flat, chop, but still looking mostly below the zero line across the board, except for now we're looking at today. And again, net, I think this is pretty even. And net on the net flows today, what's good is that at the moment, volume is not accelerating to the downside. Whereas Friday, it definitively was accelerating to the downside. Today we've had, and this is the chart. Today we've had a little bit of net inflows on that fake headlines, but it was instantly sold off. They still bought it up a little bit. I think that headline ended up coming up from Goldman. I think it was Goldman, right? Goldman Sachs. I believe so. Any green setup is to be used as exit liquidity. I think, you know, yeah, it's almost that way because like the thing is, I don't really have to be like super bullish. Like last week, I said, what my whole thing was, dude, do you really in 72 hours? Like, can I just not wait a week? Can I not just wait a week? This market moves so freaking fast, right? This market is moving as fast as COVID, uh, in a shorter amount of time off of fear, right? And if you don't know what panic and fear looks like, well, now you do, because this is what that is. But
Now you do.
at the same time, that's all it is, right? So like, over the last month or so, I have been saying, look, the market can stay irrational longer than you or I or anybody can stay liquid. That's very true. And also, being exposed in this market, it it is very much like, stupid analogy, right? But the analogy was like walking down the middle of a golf course during a lightning storm holding 2 lightning rods. You never know what kind of tweet is going to hit next, and you could get hit, and we got hit. That's what happened. So know that if you are going to be long in this market, um you're swimming upstream, and maybe you get lucky, but at the same time, it's not the time to be overexposed, right? Anyone can make fake news and manipulate market. Now, not only Trump. Yeah. Well, I think that was always true. But that's where we are on a net flow. So like until I see daily volume coming in above the zero line, which we do not, right? It's still negative volume today. Negative volume. Tick is pretty baseline. And advanced or decliners, look, the advanced decline line has been sitting in the negative 2000s, which honestly is low, right? That's as low as you really get. But even in this moment right now, I am just seeing on the net volume just lower highs and lower lows. It doesn't look great. And the tick coming down. This does not look good. I'm not watching a live market. The live market is looking
Oh, don't look
flat.
at it.
So perfect moment. Live market is looking flat. Internals are telling me no, right? Internals are telling me no. What I will do, I gotta refresh this. How do I refresh? I hate this new alert that TradingView's spinning up right now. If anyone thinks that like technicals don't matter right now, I don't think you could be more wrong than literally right now. If you haven't figured it out, the market is irrational, and fundamentals, if anything, don't matter. And so all you really have to do, all you have is to lean on technicals. So I think in this moment, technicals become extremely important. I'm just going to review really quick last week, right? And I'm using our NFP levels before I go super high time frame. I'm using our NFP levels, our trusty NFP levels. So this was March NFP high and March NFP low right here. From the moment that the market got the data to the low of the day, literally right here. So what's true when we look at these is that if we're above that NFP high for March, we are going higher. At no point did we actually get above that March NFP high. We basically were lower or in between. If you're over the lows, if you're below the NFP low of that month, you're going lower. Where are you going lower to? It's just the next rung down, whatever that next level is. It's here on the charts. I'll just show you in a second. In between, so like when you get this kind of day, when you're in between, yeah, you can bounce to the highs, but again, unless you're over that, you're not going higher. And honestly, this moment, this is that 200-day simple. This is the red line, is that 200-day simple moving average. We had 1 day, 2 days over it, and then boom, right below it, and then rejected off of it. So this was in reality, like that's your exit liquidity option. At this point, if you again follow me at all when I talk about simple moving averages, I don't care so much about the crosses or any of that. I do care very much about the distance between them. And as you can see right now, the distance between these simple moving averages is definitively getting larger. So we do have a setup here where we can get serious expansion. So from there, and again, watch this. This is Wednesday. This is that low from the NFP day. We tagged it. This is Wednesday. Yeah. We tagged it, rejected. This is in the after hours. This is the moment that I know it was Wednesday after hours. That's the moment to me that I know, like, this is not happening. This is not going to look good. Right. And again, from that technical perspective, did the technicals tell you? Absolutely, they did. Right. You got to close below, open below, close below. Yes, you got an after hours pop, but look at that rejection. That rejection is hard. And honestly, like I was very, I wasn't doing much last week by plan. The plan was to really just let this hash out because we knew we were going to get Liberation Day. We didn't know for sure or not if it was going to end up being Liquidation Day. Unfortunately, it did end up being Liquidation Day. But technicals slap right off the 200-day simple, below the 20-day. And again, the close was below the NFP low. So had it been any regular day, this is a short. This is a short. All news, all headlines aside, that day would have been a short. It ends up being one of the biggest shorts that we'll see in probably years. Period. End of story. And I think the question is, well, what do you do now? So take a look at what just happened from that last NFP level in March. I expect very similar price action, just like this, right? So if the high of that day from when the market got the data for NFP data ends up being your exit liquidity, well, it'll be the same thing here, because as long as we're below Friday's low, we are not going higher. That should act as resistance. And there it is right now. If you do get above it, the maximum, your exit liquidity here is Friday's high. And this is SPY. If I just pull up QQQ, you're going to look at this and you'll be like, holy hell, it's exactly the same. That pop this morning takes us to exactly Friday's high. And that is where I would say you don't have to sell. Same chart here. March NFP high low. Exactly. Your overhead resistance, and exactly the same close on the Qs. So if someone's out there saying technicals don't matter, I'm gonna call bullshit. technicals matter more now than anything, because again, your fundamental playbook, listen, if you haven't figured that out yet, it's out the window, because none of this makes sense. Yes, we have profitable companies, but your fundamentals don't matter because the market is forward looking in this moment, and acting off what could be, what may be, what's possible, right? So you must rely on technicals. Again, Friday's low, 419.70 on the Qs. Look at where we are. This is live. This is a live chart. This morning's pop, that's the high, that's your resistance. This is your area where, again, you don't have to get short. You don't have to sell everything, but you absolutely want to hedge, like buy some short dated puts, buy some damn protection, right? If you see Friday's high, how's that? Buy some freaking fracking protection. It's expensive, yes, but it's worth it right now. That's what I can say. And no, it's not time to buy anything yet either. If you want to stay away from catching a falling knife, what I just told you is that unless we're over Friday's high, we're not going higher. So if we are over Friday's high, okay, go shopping a little bit. Go shopping a little bit, but know that if we get something like this, a pullback like that is very plausible, but you must see this, right? So again, I'd rather be a buyer much higher than trying to snipe a low that could just keep bleeding out on me. Does that make sense? Right. And if you do buy, again, you don't be a buyer if you don't know how to use the sell button, right? Not here, not yet. Next year, I'll say that, right? But not here. It's too. Look, am I being too rough, Emp? You guys can help me out.
No, I think some people need to hear it in this manner.
I'm trying, right? So like, again, this is our basic, right, with moving averages on. I think I got all of them. Oh no. Where's my 50-day? There. So with the 50-day, this was that dude, 575 feels like so long ago. All right, guys, you can't look at this. There's no way. I'm just looking at this chart, dude. To think this is still a bull market, you're high. I'm sorry. And I'm not trying to be a dick, right? But like, it's not. The question is the damage done? I don't know. And I pulled out this 2022 chart not long ago, and everybody yelled at me that it was a different story then. And I was like, well, this was the comparison, 2022, exact same setup. Can we get these face ripping rallies to the upside? Absolutely. Are they still possible? Abso-freaking-lutely, right? Can we now be in this move here? I think actually we might be in this kind of a move here. Does that make sense? So like we already had the first bounce, right? We called that out as like potential dead cat bounce. It's there. We got it. The problem is that we didn't get exactly the full-blown bounce that I wanted. We got about half of it. And we stopped literally at a similar position as right here. And now we're here lower. So what do you do? I think the question is, if you see this, if we start to set higher lows, it's going to look like this bounce that we're getting right now here. And then if you start to see lower lows like this has got to be, I don't care if the macro is not the same. The technicals is the same, and that's the story, right? So you're going to take basically the last low. So if this is the first low of 2022, like face ripper to the downside, it's going to look just like this. And we'll set it up so that you can see what it's going to be, right? It's going to look just like this. We've already gotten this bounce, right? We came down. Now we're breaching those lows. We're going to have to reclaim those last lows. And if we do, then we can get another big bounce, right? But my warning is that if you're long term, or I mean, if not, if you're long term, if you're whatever, if you're any term, you probably want to be using the next one as liquidity, because the better buys are probably still to be seen. Does that make sense? I mean, it is impossible properly. What I'll say is, if we do get a bounce, it's definitively going to look just like this, right? This is the 2022. And I don't care what you say about the fundamentals not being the same. The market sentiment, think about this, the market sentiment was exactly the same. It was all about economic uncertainty. So hopefully that helps. Back to today. Oh my God, Emp, that last low is so far away.
Yeah, no, it's
Why didn't you tell me I was being unreasonable right away? The last low is so far away. Okay, so what the last low, it's really going to be this one. So I'll tell you where it is. It's 505.
that's what we hit. That's what we hit this morning.
Yep, but that's what it is. It's 505 and this shelf. If we get a bounce like this, so it's going to be like this. If we get a bounce like this and we have a hold, you're going to have to see two. You're going to have to see a bounce, and it's probably going to hit this high. Gold is coming down. I'm short gold right now. It's probably going to hit this high right there. I'm going to need to see a breach, and then a second higher low. And that higher low is going to have to be above, not today's low, but Friday's. Is that Thursday? Oh, it's going to have to be above. This is the NFE level. It's going to have to be above Friday's low. We're going to have to reclaim that. And that is definitively what it is. It can look like this, and we could bounce. I don't want to say that high, but if you see a bounce that's into the 530s, anything like that, listen, these levels are still all accurate. That do or die level. If we get at any point 575s retested, oops, sorry, I just kicked the mirror or the camera. You got to take measures. I don't care how bullish you are. You got to take measures. If at any point you see 575, if you're lucky, you really got to start taking measures at 550, quite frankly, right there, which is the breakdown level. So I would expect that 550 becomes first overhead resistance, which is this last breakdown level. This is another break of structure. You have to buy some cheap protection. I don't care how it goes. What I don't mean is, I don't mean going out and buying long dated puts. I don't want to see that. I'm talking about on Friday, maybe you buy some 2 or 3 week, out of the money puts for a cheap small dollar amount and hope that they go to zero against your longs. That's it, right? Honestly, you guys got to realize those will pay heavily if you can do them right. And if you're not in the server, come to the server, because we trade all this every day. And we literally, we are green. That's all I can tell you. In this mayhem, we are green. At least I am green. And if you followed anything I'm doing, you are green also. But I would say it's 505, right? And again, if I turn these NFP levels back on, I'm going to pull this down so we don't, just so I only have like this year. Actually, let's do 4, just so we see this year.
Oh my God.
It's literally this. So 505 spot 07, that is the line in the sand right now. 505 spot 07. You can get up to 526. At 526, you need to take your first level of protection right there, especially if it happens too fast. Um, and the NFP level telling me now is that this is 565, spot 63, right there, and that makes perfect sense. So at 565, you see that so the higher you go, the more protection you should have. Does that help?
I do got to run. Appreciate you as
Is it
always, Paper.
something?
Y'all enjoy the rest
Always
of the
volume
stream.
on slide today. Yeah, it's crazy. All right, Amp. I appreciate you, man. I appreciate you. But yeah, guys, these are some of the craziest 3 days in the market that I've seen in a very long time. These are COVID type responses, maybe even deeper. So it's sketchy, I think, at the very least, to be like, look, I want to buy the dip. That market's gone. That market is definitively gone. um, and if you're short now, that's fine because this market is going lower as long as we're below 502. You'd over 502, 505, you don't really want to have a lot of short protection on. It's more in the 525 for SPY and the 565 levels. Those are the two levels I would actually put protection on. But the tariffs will decide a lot. Yes and no. So like when it happens, yes, but here's the thing. You need to rely on the technicals here because the tariffs, even if you get a tariff announcement, the market's not gonna believe it, right? The market's not gonna believe it. So the technicals are what's real here. Like the tariffs are more hopefully, possibly, could be. All that stuff is shenanigans at the moment, right? Like you only have technicals to rely on. And honestly, the technicals and exactly the levels that I just highlighted for you today, just now, are those exact same spots where, you know what, we're going to get those reactions at these levels based on like it. If tariff stuff happens, for whatever reason, I'm just telling you now, it's going to happen exactly at these levels. And all those levels you're going to start checking those boxes, right? You get there right here at 526. I'm telling you, you're going to feel like, oh, it's all good, right? 565, you're really going to be high on life. But that's the time that you're going to need to put some protection on. I'm not saying to sell everything and run. I'm definitely not saying that. I am saying don't be a fool. Don't be blinded. Uh, and grab some protection. Because yes, we can have a face ripping rally, but let that go to these two levels, and then definitively put some protection on. For now, if you got protection, you're just riding it. You're just riding it. Yeah, I think so. Trading very, very different, right? So you guys are saying VIX is spiking again. Look, I'm looking at this is a live chart. I'm telling you that if we're not over these levels, the market's saying this is all sus, right? It's suspect, like suspicious. It's not happening, um, and it's not happening. The best case scenario for now is that Qs close over 420, SPY closes over 505, and we start to slowly chop and grind our way back up to that Friday high. Not that face ripping rally that we had like at the lows. By the way, this is crazy, right? This little blip alone, which began, is 8.5%. Like in a normal year, like SPY's average move 8.5%. That's like an entire year's worth of movement. Like in less than an hour. That's crazy, right? So like the market is crazy. All I'm telling you now is like I don't have a signal to buy it just yet. 10% on the Qs. That's wild. I don't know how the Qs didn't get halted up. Like that should have been a circuit breaker up with that type of movement. That's crazy. So the market has made a big run, unfortunately, to the downside. Ideally, it rests. Look at VIX coming back down as we cross these levels. You're right there. You don't want to see this get rejected, which it could very well happen. So, Yeah, this is insane. How is APP deep green? You know, that's a good question. Why don't you guys go ahead and drop some tickers in the chat, and we'll take a look. I know that a lot of people are gonna have some basic ones, so we'll hit that. Um, this looks like more headlines coming. Definitively, I'm hedged on my hoodie. By the way, so like if you're in the server. I should probably take some of this gold short down, huh? I'll trail out on some of that gold short. um, if we're in the server, this is how it's literally short dated at the money puts that I've been doing for hood hedges. Been doing some condors, which by the way, have a couple of them getting absolutely decimated, which happens. Trying to find the first hood put. So I'm still long hood. I can't find it. Anyways, they were there. Limits. And I ended up rolling to 33 puts at the close. Oh, here you go, 40 put. So this was on the 28th, which is over here. So 28th, Friday, $40 puts coming out as a hedge against equity. Ends up doing well. And at the close of the week, I ended up moving those to 33s, hoping that they go to zero. But anyways, if you're long equity, literally that's how I would be doing it. Very short dated. You don't need a lot of time. This market is reacting extremely fast. If I could move this over. The market is moving extremely fast, so I don't need to buy a lot of time. Yeah, the other ones, I did take that Palantir put. I grabbed them at like 48 or something. This is for 425 expiration on this technical setup. Those are up a bit. Think that they got to 375 this morning. But anyway, so hood here sitting on the 200-day simple moon average. What I'm going to do, so the number that I didn't want to like really call out is like sub 25. If all hell breaks loose, it is sub 25, just so you know, on hood. I don't want to be like buying a whole lot here. We do have a session gap from after this last earnings report or 2 earnings reports ago. We have a session gap at 25. So I think that it's really possible, almost probable that gets filled and potentially overshot, which the overshoot would be more in that like just it's sub 25, right? 22, 23 type area. And at that point, if something like that happens, we're probably looking at a VIX at freaking 60 at that point. For now, the overhead resistance is just under 38, which unfortunately, oh my God, that's what I'm talking about. Literally this morning, that would have been a good hedge. Like all those spikes this morning would have been a good time to hedge. You're literally popping up right into those resistance areas. It's possible that you get into 40s, but I would want to be protected as close to 48 as possible or 38, just in case. And I want to have hedges on at this point in time, definitively. And ideally they go to zero. That's hopefully. But short dated, nothing expensive, not wanting to risk a whole lot. Am I emotionally getting ready for use? No, I am already ready. Just so you know, positionally, I am already ready for a circuit breaker. So like, yeah, Hood is still my largest position. Tesla is still my second largest position, but my net positions are not that large at this point, and I'm like 20% short with a whole hell of a lot of cash, and a lot of those shorts are already on these equities. So, am I getting emotionally ready for a U.S. circuit? No, I'm already ready. It could happen right now, and I'm going to be green. So that's what you should know if you want to know. And am I buying anything? No. I'm going to scroll up a little bit. And that's what I was like last week. I was like, can you just not buy anything yet? Like, is that possible? Like to just not buy anything last week? No. So I wasn't buying anything last week. I was already like getting prepared for a shitstorm that could happen. I didn't pull the trigger on any shorts yet, not until that Wednesday. That was like, okay, it's happening. So it ends up being Thursday. Which was already a deep red day, but I didn't care because I know, right? I've lived through COVID. I traded through COVID, the whole thing. I traded through 2022, the whole thing, right? Like it's not my first generational buying opportunity. It's stupid. Like millennials, dude, millennials, the term generational buying opportunity is a joke to millennials. Sorry if I'm sounding overly bullish or bearish, but you can't see multiple generational buying opportunities in the same generation for it to be a generational buying opportunity. Anyways, so Nvidia. So that's Hood. Hopefully you guys know these are the areas I want to be hedged. These are the areas that I would actually be very interested in buying. It's a lot lower, right? Nvidia, we talked about 75 for a while. Look, a long time ago, and I put this chart on my timeline. At this point, Nvidia was probably one of the ugliest looking charts in the market. At this point, it still is one of the ugliest looking charts in the market. So no, I'm not buying. Is it 75? So remember this last breakdown. The last breakdown is you're going to have a VIX at 40 plus. You're going to overshoot 75. You're going to overshoot 75 if it happens. So wait till less than that. Wait till lower. Just because something gets to your level doesn't mean that it's time to buy it. That's like, I want to watch it. So it's 68, maybe, potentially even lower. Where a lot of the confluence is going to come in is around, so these purple lines, these 200-week simple moving averages. Did I say 68? I'm sorry. It's not 75 or 68. This is 50. This is sub 50 on Nvidia. Nvidia, okay, is below 50. So I'll type that. Below 50. I'm going to be like, dude, you're a perma bear. I'm not a perma bear. I'm not. But this is what's true. If I look at this volume profile on the right-hand side of my screen, you got a big problem here. And this is the same thing that was like screaming earlier in the year. My soul is prepared. There you go. So Nvidia is not 75. It's 50. And it's from right here because that's what it is. Sorry. Hate me if you want. Not trying to be a perma bear, but like I'm going to get called a perma bear. I just know it. Whenever I do this, that's who comes out. And definitively, if you see 115 on Nvidia, you really want to hedge. You really want to, oh my God, my gold puts. You really want to hedge. For now, it's 105. Did we get to 105 earlier? I don't know. As close to 105 as you can, you want to put some protection on. It's $50 on the chart of NVIDIA. If we lose this level, which it looks like we're going to test, and in this environment, we're probably going to lose it. So this type of support, this is not strong support. This is not strong support. NVIDIA was only there for 2 months, 2.5 months. That's not strong support. So it's $50. It is what it is. Look at this massive volume shelf here. That's huge. Would I say, like, and I have been saying this whole time, you never want to be fully in, fully out. I think you can be long NVIDIA, but what I am saying is buy some inputs, right? Or hedge it, right? Like hedge it. You can make a lot of money so that you can buy more NVIDIA. Does that make sense? There's no problem in hedging. Be long. You never want to be fully out of the market, even in this scenario. You don't. But I'm not such a, like, what's the word I'm looking for? Like, it's not all or nothing, right? Like, never be fully in, never be fully out. How are you going to buy the dip? What are you going to do if you blow your load at 75 and it goes to 50? How are you going to buy the dip? Anyways, that is what it is on NVIDIA. Is sad. All right. Let me scroll up and see. So NVIDIA was one. You know what I will do? So if you want to know, SPY is lower. Just an aside really quick. So same view. This was that massive run up all the way up here. We're going to come in to the 200-week simple moving average. See this volume shelf? This is where all the money is on SPY. It's not here. This just happens to be almost, it's not even almost retest 477 2022 all-time highs. It's very likely that we go into that, right? And if we go into that, it's 400 on SPY, 415, right? So just below the two, if you see SPY below the 200-week simple moving average, okay, I think you start buying, but also buy some puts at the same time. Does that make sense? Buy the shares and buy the puts. Don't sell puts because shit can get crazy. Don't sell puts. Don't do that. But buy some puts a little bit and buy your equity if you want to be long. It's worth it for a little bit of breathing. It might even be like 420, 415, 420. I would love SPY there. And that, so right here, right now, I believe this is going to be a 50% retracement. Boom. Just thereabouts. From that all-time high and 2022 October lows. So 2022 October lows, let me just make sure this is not it is. All right. So it's 460s right in here. Is that log scale or not log scale? I don't want log scale. I hate that they're doing log scale. You're about the 50% retracement. You're not quite there yet. This is that golden pocket. That is sub 450. Right in there to 440 for your first kind of like, I would like to have a buy zone. But if you do lose that, it is 420, and that's your real value. It's going to fill a fair value gap down here. And if this is the last major low right here, the low before that low is 420. I can pull that across and see a lot of areas of confluence. That's worst case to me. So between here and there, look, you're already halfway through. Does that make sense? Like you're already halfway through. That's why like it's not necessarily sell it all, right? This is about 30-ish%, 35, right? If there's major look, I got a lot of these questions over the weekend. Is like how deep can we dig this hole? There's a saying in like if anyone's like AA or recovery, there's a saying is like the hole only stops getting deeper when you stop digging. So if we stop digging, the hole will stop getting deeper. But if we keep digging the hole, it can keep going lower. It can keep getting deeper. So you have to wait till we put the shovel down, man. So anyways, all right, moving on. Tessie. So at this was where I wanted to see it bounce. We did get a little bit of bounce. That was the first fail, 360, 10%. When you failed that 330, that's when we know it's going to 250s. It went to 210s, went long again, right? Failed at 290s. By the way, this dip, we caught this. I caught this in the server and gave it out. But that's a 30% move, $70 move. That's like 700% on options. And then I was like, look, we gap through. We're very likely to hit this 218 gap. And it's possible that we go lower to this area, which is like 160s. So no, Tessie's not ready. I don't think it's a long. And it's unfortunate. Like I still own it, but I'm hedged. It's unfortunate here. You want to do something called a collar. We went through this. One of our members in the group asked about like, hey, what can I do about Tesla? And we walked through what's called a costless collar on Tesla. That was at the time it was selling 330 calls for May and buying 200 puts for May for free. Actually, you collected a credit. If you wanted to be a little bit more aggressive, you could have sold 300 calls for May and bought 250 puts. Either way, that was a hedge, a free hedge, and then you can offset the balance with some TSLD or whatever it is, if you want to fully hedge. But again, little bit of a gap. Different stocks will bottom at different times. This is that low gaps of all the stocks. Tesla so far is not making new lows. Whereas like your Apples, your Amazons, Nvidias, those are making new lows, just to be fair, right? So far, Tesla hasn't made a new low. Does that mean it's not going to? Absolutely not. Is it at risk? You bet your ass, right? So sub 200 is absolutely in the cards. It is. And it would be more along this area because this is a big base. This is a good base right here. But it's back to where we first bought it. Last really bought it. Not traded it, but where we last really bought it in the 180s. And that is what's true. It's just another lower high right now, equal lows. So maybe this one takes a little bit. There are stocks out there, by the way, where people are going to be, and this is important, people are going to be like, oh, like this is holding up a lot better than the rest. Don't listen to that, right? Those are the ones that are going to get hit, right? Like those are the ones that I'm going to be targeting. Nobody's safe. Nobody's safe. I'm so bearish right. All right. I do AMD. AMD was out of the downtrend, firmly right back into it. AMD was out of its downtrend for 5 days. And then this day, 107, no, right back in, right? So failing again, you actually got a retest. We call this a lifeline, right? Where you get a retest of that resistance level or broken trend. That's exit liquidity. Happens to be Wednesday. Now you're in the new lows. You're in the 80s. This is god awful. It's 70s now. Again, these are the last lows, kind of like the high before that last low is here, 71s. But there's nothing bullish about this chart. Like you get to 70s, and yeah, I'll tell you, it's gonna like low 70s, 72. it's going to stop going down for a while. I'm positive it'll stop going down for a while, and it might go sideways and possibly pop up a little bit. But if things don't turn around quickly, it's just going to go lower. Which would be the 30s. You know, I'm saying that. It doesn't make any sense to say this like fundamentally, but that's I I'm not making this up, right? So like if this gets lost, that's a massive shelf. That's 35 if tariffs go through and like the stock market gets wrecked. That is also you're halfway there. I'm gonna get so much criticism, you guys, for saying this, but all I'm telling you, I'm not making any judgment calls. Really, I'm prepared for it, but it's there. I appreciate you guys. Yeah, I mean, it's the headlines. What can you believe anything right now? um, Victor saying no circuit breaker in the USA. I'm still behind on the chat. Victor has a point. It's an orderly sell-off. I got so many calls this weekend. I was like, dude, why didn't the technicals tell me? I'm like, what are you talking about? What part of these technicals didn't tell you? I just don't understand. This is the velocity is there. The velocity of that fall. Look, Trump literally threw kerosene on a existing fire. Unfortunately, so we sped up quite a bit. We've moved like the length of an average freaking quarter in a day, like in the last 3 days straight. So like it's hard to be like, yeah, I want to buy this, like, or you know, it's hard to short still. You're like, is the pain done? I think a lot of the pain is done. But it's rough. It's rough. All right. Arista. This is a hedge spot. Yeah. You want to be careful here. Can it go higher? Yeah. If you see 80s, protect. You can stay long. This is a good one. Arista is very close to that Friday high. It's not over it though. So like I need to see it over that Friday high. In the meantime, this is where it could very quickly get slapped in the face. It's a bigger slap in the face if you see 80s. And then we'll see. Because it's all, technicals will tell me beforehand if we start going down. But we want to see Trump put the shovel down and stop digging. Hopefully that makes sense. Amazon. So Amazon, again, you're right there. So the low end is 150s. I actually had Amazon 150 puts coming into today for Friday because they were cheap, and they like tripled almost. It was like $1.20 or something on Friday, but it is actually just slightly below 150. This is an area where like it's interesting. Can it go lower though? Yes. 145 is this area low. I can drag that all the way across. I have a lot of confluence. And honestly, the chart supports this as an area where if this 145 area were to hold, the entire bull case thesis, get this, is still valid. Is that wild? Like for the multi-year run. For a multi-year run, even if, watch this. Like, even if Amazon were to come in at 145, tell me that's not going to be the biggest freaking cup and handle you've ever seen, right? So like, okay, that's fine. I like this one the best, but at the same time, and that's what's going to happen. They'll be like, oh, what you don't want to see is you don't want to see this breaching here and then getting rejected right there. Because that, if the market can't pull it around, is exactly what would happen. So if you buy Amazon and you get close to 190s, you need to protect. That makes sense? You need to protect. Because this is the other scenario that could just as easily happen. And not 20, right? But it would be 100. If Trump decides to erase a couple years of gains, it would be. But so from here now, like you can get a big bounce. I don't think this is Amazon is one of the ones that I like. I like Hood, I like Tesla, I like Amazon. For the ones that like if there's a big turnaround, it can happen. But I want to be protected, man. Let me tell you. I want to be protected. And if we do, where's that 50%? Yeah, so we just moved that bounce today is exactly 50% pullback from swing low here 2023 lows to 2025 highs. That's exactly 50% retracement on Amazon. So that low of today has to be the low. If not, then you will see that 145, which I was protected for and ready for. And it doesn't cost a lot of money for that kind of protection. It doesn't have to cost a lot of money for that kind of protection. Margin, you guys. No, there's nobody's on margin calls. That's shenanigans. Yeah, everything going. It's minute to minute, dude. It might tomorrow, Friday. You might be saying everything's going down again. Yeah. So like the puts are just like weeklies. Right now it'd be like 43s. It is 43s. And hopefully they go to zero. I started with 40s and I have some profit from those. I closed those at like 32. And then I ended up rolling to the 33s on Friday at the close. Yeah, 618 retracement from 2022 lows all time high. That's like 475, right? I like Tomley. Is this 2,500 people on here? I don't know if that's right or not. Okay, Edward. Hey, good thing is I think Edward is no, Edward might not be doing the March Madness with us. But the cool thing is if you guys are doing any of the March Madness stuff, you're at least making some money over there. Let's do Google. The goggle. And then we'll start to call it. So goggles. So okay. So look, today I think is the brunt. If we get a bounce into Thursday, don't be so blinded to think that it's all good in the hood. All right, so let's start super high level. This is right here, 2022 all-time high retest. I was looking for that initially. We definitively got that. What has to happen now, and that's 150 spot 97. What has to happen now is that Google has to reclaim that. And until it reclaims that 151, it's going to be very choppy and it could whipsaw to the downside. So even this morning, and now I'm zooming in, that's exactly where we're basing. That's where we rejected on Friday. That's where we rejected again this morning. 151 is right now overhead resistance. Remember, if we're in a bear market, in a bull market, you buy at support. In a bear market, you sell at resistance. Does that make sense? We're in a bear market for right now. There's no wash on that. So that's the first level right here. We're like, you got to be kind of like on your toes. We'll have some kind of have something, right? And then if you really do bounce, it's the 165 level. I want a little bit more protection. You can be long though, but you need to know 160 is just under 165. Careful. Can this turn on a dime? Yeah, dude. The Trump could make some kind of tweet, some kind of deal, but right now that's hopium. And like, if he does, is the market gonna like explode to the upside? It is. The only question is like, so why I'm saying, okay, be long, but buy some near dated protection. It's worth it. Even if it's expensive, it's worth it near dated. Because you never know. And that way, and I'm not what you're not hearing me say, and this is important, you're not hearing me say sell calls anymore. You're not hearing me say sell puts, right? What I am definitively saying is, okay, be long equity. If you're going to be long equity, pay for some insurance, short dated puts. I wouldn't go any further than the end of this month, right? Because if you go too far, you're going to pay way too much. How do you judge? So, and Carl's asking, how do you judge how much for protection? So, what percent? It's just like a very small percent. Because the thing is, here's how options work. It's still that 35 delta, give or take. In this instance, you might even be able to get away with like 25 delta short term. Because if shit hits the fan again, right, those options are going to increase exponentially by that still increasing volatility. Yes, is volatility expensive as hell right now? You bet your ass, right? But is it still worth it if you are overly exposed? Yeah, I think it is. I don't care, right? I don't want to limit my upside. I'm not saying sell calls, because if something happens where we do get a turnaround in the tariff situation, number one, I don't know if you're going to be fast enough on the technical perspective to be able to like, okay, flip it, right? So if you're gonna sell calls, you're gonna damage, you're gonna lose out on all that upside move, right? If you're gonna sell puts, you're even worse off if we go to the downside. I'd rather just spend a little percent, I don't know, 10% or less than that, like a couple, like 3% on some cheap out of the money puts 1 to 2 weeks out, and sleep a whole hell of a lot better at night, man. That's it. And just sleep a whole hell of a lot better at night. And honestly, if we get like some kind of a rug pull of of more astronomical proportions, they're gonna pay very, very well. And then you can take your profits quickly, which is like take your profits and go buy some more stock, right? In the Victor, yeah, in the money does not, right? So like, no, it's not in the money. What I'm saying is still the same, like 25, 35 delta is fine, right? But it's so slightly out. It's not in, because if you're in the money, remember, if something happens and we hit these levels and we are going up, dude, just know how big are those upsides that I'm talking about? They're huge percentages, right? The upside percentages are massive. So like Qs again, oh god, we can take elevator up, right? And so I don't want you to be in selling calls. That's 14% upside on some of these things in what could be two trading sessions. I'd rather you waste that money, buy some cheap protection, cheap-ish protection. It's all expensive right now. Buy some protection and hope to God it goes to zero. Does that make sense? Micron, and then we'll call it, right? Dude, nothing. So again, Friday's high, even on equities, this matters, right? So Friday's high happens to be right where it got slapped. It's not going down again yet until things are below Friday's low. This is what would have been the best case scenario for Micron. Did not happen. You lost this. And so when you lose that, you go to the next level, which happens to have already been on my chart. It was there. So again, big run. A Micron is already at the point of what I was saying that some of these like SPY could be. So some of these will bottom faster than others. Micron happens to already be basically at this level, well under its 200-week simple moving average. $60, my dude. Who had $60 on the bingo card from Micron? I cannot say that I did. I cannot. But this is a better support level because this is essentially 4 years of a base. The question is, are we really going to erase 4 years of progress? Well, Micron already did. Wild. How much is this down from the highs? Like to think that like Micron's not in a bear market. Yeah. This is already down 60% from the highs. That's not a bear market chart. I don't know what to tell you. Well, then I don't know what is. This has already hit it. Like I don't. This could go lower. 50s. So if it loses this level if it loses today's low, it's going to go into the looks like 40s, which would be another 30%, which would be wild. But if it loses the 63, 60 level, all of this, then you need to be short and you don't want to be long. And it's going to probably around 45. And it might happen in 2 trading sessions. And you'd be like, what happened? What happened? Which, think of that. It might happen in 2 trading sessions. You don't need to buy a lot of time for these, like for puts. You don't. Not in this market, you don't. If you get up to 80s, again, you need to take measures. So up here, that's resistance now, right? So like you can get a 30% rally on Micron, but at this 83 level, this was that prior support here. You need to protect. This is what you got to do. Because that is now your overhead resistance. So can it bounce from here to there? It can, right? But at 80 something, you got to protect. And if it loses 63, you got to close, learn what to put a stop on it if it's equity, or you get a little alert to buy some puts. Because 45 would be it. For right now, let it breathe. This is not where I want to sell some calls because we just looked at 80 as a possible level. It's 68 right now. I don't want to miss out on that. And I don't want to be tied. I don't want to be tied to a stock for that long when this is who the frick knows. I'm just doing a quick check on internals. It looks like they're not going down anymore from an internals perspective, not looking at charts. We could go back to Friday's highs, but you got to be cautious there. So I don't think this is the time to sell. So moral of the story is I don't think that it's time to sell because I think that you have already hit a lot of it. And you could get a nice little bounce. But if you get a series of like, let's call it 3 green days in a row, and I don't mean big green days. I mean like little green days at the index level. Put some protection on. I'm not even saying raise cash. I don't even like that. I do like paying for some freaking insurance though. Sorry. I got yelled at too many times this weekend. We were like, why didn't you say? I'm like, what are you talking about? So that's why I'm like this today. So hopefully I'm not too bearish for you guys. I just want you to be aware of what's going on in the market. It's not easy, but it is simple. Simply put, it's not the bull market that you remember. It's just not. And simply put, yeah, puts are expensive, but they're also worth it right now. So there you have it, right? And yeah, somebody mentioned there's a long-term trend line. Yeah, so this is like if you long-term trend line. Oh yeah. I don't know that you need to go that far back, but even still, it's more like channel. What I had these. Even still, so it's broken. If it bounces on something like this, a retest of said broken trend line is your short zone, which is exactly what I'm talking about. It's in the 80s. So anyways, I appreciate you guys. Hopefully it wasn't too bad. And if you really want to trade alongside me, guys, you can. I'm literally live every day. And June, you're welcome. That is wildly down. But yeah, look, hopefully you guys survive another day. But yeah, sometimes insurance is worth it. Yes, it's expensive. Sometimes it's worth it. All right. Love y'all. That's it for me for now. And I will see you on the next one. Peace out.